Hi everyone, and welcome to Investing in Canada. The objective of this whole course is to make your investments in the most effective and efficient manner. Okay, so if you have attended the introduction part of it, so you know what we are going to discuss. So in this section we will be covering different types of investment accounts. This short video is focused on tax-free savings account, but future videos will be also covering registered retirement savings plan, registered education savings plan, the new tax-free first savings account that was recently launched, margin accounts, and non-registered accounts too. So subscribe and like if you haven't done it yet. But in this short video we are going to discuss tax-free savings account. Okay, so what is TFSA? So as the name suggests, it is a tax-free savings account, but it is not actually for savings. It is for investing purpose. So you shouldn't treat it as a savings account. It is an investment account. It is an account where you can add investments and you can contribute a set limit. Those investments, when they grow, they become tax-free. So whatever you withdraw from this account is going to be tax-free. So what are the features of it? You can contribute the yearly stated amount. In this year, in 2022, it is $6,000 plus the past unused contributions that you have. So if you haven't contributed in the past, then you can contribute those amounts in this year. Plus, if you have any withdrawals in the last year, you can contribute that too. So every year you get $6,000 from the government, from CRA. You can contribute that. Plus, in past, if you have some room left, if you haven't consumed your past year's contributions, then you can contribute that. Plus, if you have withdrawn some money from TFSA, that contribution gets applicable in the next year. So if you are withdrawing in 2021, that contribution room gets expanded by the withdrawals in 2022. Now these contributions can be invested in stocks. It can be invested in bonds. You can add mutual funds to them if you open a mutual fund account. You can add exchange traded funds. You can add REITs, right, real estate investments trust. So you can even get exposure to real estate in your tax-free savings account. Now stocks, you can add Canadian stocks as well as American stocks. Same with mutual funds. You can add Canadian mutual funds, global mutual funds, or even American mutual funds. So do remember that this is an investment account. You can add all these investments into your TFSA. Now what are all these investments? We'll talk about in the future videos. So all investment income, dividend, interest, and investment gains are tax-free. So whatever you generate in this account, maybe it is interest income, maybe it is dividend, or maybe it is gain because you bought it at a low price and selling it at a high price. So all that becomes tax-free. So withdrawals are completely tax-free and they are not treated as income. So it doesn't constitutes your income in the year of withdrawal. So if you're withdrawing, let's say $20,000 from your tax-free savings account, that would not be treated as your income in that particular year. There are no restrictions on withdrawals. Your withdrawals are not restricted at all. Tax-free savings account can be opened with a bank, with a broker, or with a mutual fund company. So you have multiple options to open. And this is an important point, that there is no restrictions on withdrawal. Like registered retirement savings plan that we'll see in the next video has some restrictions, but tax-free savings account does not have any restrictions. Now, how much can you contribute? So each year the contribution limit is different. So it was opened in 2009. So 2009 to 2012, each year the limit was 5,000. So from 2013 to 2014, the limit was 5,500. 2015 was a flux year where the limit was increased to $10,000. Then it was brought down back from 2016 to 2018 to 5,500. And now it is adjusted to inflation. So it will change in the chunk of $500 based on inflation. So right now it is $6,000. So if you were a citizen and you were above 18 years of old, or you were a permanent resident on and before 2009 and you haven't contributed anything to your TFSA, you can in total contribute $81,500 in as of 2022. So all the past contributions you can make up in this year in 2022. Okay, so it applicable if you were 18, resident or a citizen on and before 2009. Now this is an important point. If you haven't used your TFSA, you will have a large room in it. So first try to consume your TFSA accounts for your investments. Where to open a TFSA? There are multiple sources. You can open up with like online broker like Wealthsimple Invest, which is an automatic investment platform. You just contribute money and they take care of investments for you. It is a very 5 to 10 minute process to open the account with them. You can also open it with Wealthsimple Trade, where you get control over what you want to buy and what you want to sell in your TFSA. So you can have access to Canadian stocks, American stocks, Canadian ETFs, American ETF, etc. in your Wealthsimple Trade account. You can also open it with big banks and big investment firms like RBC, TD, CIBC Invest, etc. You can also open it with Sun Life Insurance or other insurance companies, or you can open it with mutual fund companies too. Okay, so we'll do a case study, right, on how does TFSA actually work. So what are we going to do? What happens if you had invested the annual maximum amount from 2009 till today, and what will happen if you consider a 30-year investment horizon? So what are we going to consider? You start your TFSA account in 2009, you start investing in it. What would be, how much money would you have in your TFSA account right now, right? How much is the expected money you will have in a 30-year horizon, right? So we are going to look at that. So there are a couple of assumptions. We are taking time frame from 2009 to 2022 present. Then we are going to project it to 2039. So 30 years in total since the start of your account. So we are probably looking at a retirement situation. We are investing in a global fund, so we do not want to take too much risk. So we are investing in the global stock market, which has annual returns of 6.88. You can check it out. VT is the ETF that I'm talking about. It invests in all global stocks, like it is not country specific. So 8,000 or 9,000 companies are there in the fund, and it has given 6.88% annual returns till date. Okay. There is also an assumption that the future contribution room will stay $6,000. It is going to change based on inflation, but for simplicity purpose, we are assuming it is $6,000. Okay, so let's see what happens, right? So I'll open an Excel sheet and show you what has happened. So give me a moment. Okay. Yeah, so this is the Excel sheet that I was talking about. So what is happening? In 2009 you invested $5,000. In 2015 the amount was jumped up to 10,000. Then you continued 5,500. Then it was changed to 6,000, and you will continue investing that into the future till 30 years. We have assumed that the money grows by 6.88%. So you can see, like if you would have maxed out your TFSA account till today, that is you would have invested around $81,500, right, till 2022, you will be sitting on, right, around $136,000. Okay, that is what your money would have grown to. Now if you withdraw this money, this will be completely tax free. It doesn't impact your income, it doesn't impact your taxes, it is tax free. Okay, now if you keep on investing that, if you keep on investing the maximum stated amount, by 2039, that is 30 years in total since the start of the account, you would have around $620,000 in your TFSA. So you have in total invested $183,000 and got around $620,000 in your TFSA. Now there is a financial planning rule that whatever money you have, either you can withdraw that in one go, or if you keep on withdrawing 4% of it and keep it invested, you should be able to derive a pension for rest of your life if the market does what it has done in past. So if you do that, you would be eligible to withdraw a pension of $24,800, around $24,800 from this TFSA. Now this pension will be completely tax free. You don't have to pay any taxes on it, and it does not impact any other CPP payments or any other pension payments that you get from the government or from the private sector. Okay, so that's the thing. So if you keep on investing the maximum amount, invest it in a low risk instrument, you should be able to get around 620 based on the estimated returns that we have taken. And either you withdraw that in lump sum, or you keep it invested and withdraw a set pension every year, right, without impacting your taxes. Okay, so let's continue. So this is what we saw. If you continue and invest maximum, you should be around $620,000 or a pension of $25,000 at a 4% pension rule. Okay, now important point, all of this $620,000 or the pension of $25,000 is tax free. This is also important. It's not considered as your income, so it does not impact the CPP payments you get, old age security you get, or even guaranteed income supplement that you get from the government. Because if your income is too high, government will take these benefits away. But TFSA is not considered as income. So even if you have $1 million in your TFSA, that is not considered as your income. So it doesn't impact the welfare payments or the pension payments you get from the government. It does not impact any welfare, tax deductions or credit, as it is not treated as income. Okay. Now when you're contributing in TFSA, you should be careful about over contributions, because there is an over contributions penalty. Over contributions to TFSA are subject to a 1% penalty tax per month, only on the over contributed amount, not on the whole amount. For example, if by October you have reached your contribution rule and then you over contributed $2,000 the rest of the year and did nothing to correct the over contributions, then you would have to pay 1% of $2,000 for October, November and December. That is, in total you have to pay $60 in penalty. So whatever over contributions you do into TFSA, you have to pay penalty on that. Okay, it is 1% every month of the over contributed amount. So if you like videos like this, please subscribe and activate the notifications for videos like this. You can get access to the complete course on Udemy or Skillshare. The links are in the descriptions. Thank you. And in the next video, we'll talk about registered retirement savings plan.